as soon as the DOJ comes out with RICO charges. I mean, spoofing charges can be dealt with by the CFTC, by the DOJ. They can be kind of dealt with, slap on the wrist, and it'll all go away ultimately, but not RICO charges and wire fraud charges. So the minute that charges are laid, every single lawyer and their brother globally is going to sue these banks.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight is part 2 of this month's interview with Andrew Maguire, where he talks a little bit more about what's happening with the DOJ, CFTC, whether investors will have any options to reclaim losses against JP Morgan and the other banks that have paid fines, acknowledge spoofing. So we're going to keep an eye on that. If you're wondering if you had silver investments that were affected by JP Morgan or Bank of Nova Scotia spoofs. Anyway, all talked about in tonight's show. So with that said, here you go.
I think a lot of people have, where it's ironic that mainly the only shop in town being labeled a criminal enterprise, charged with a RICO statute. Keep in mind, we're now in September. John Edmonds, that was almost 2 years ago. It was November of 2018. Yeah. And, you know, now when there's an ARB on the board, JP Morgan's the one collecting free money. I know, and perhaps maybe you could also share a little bit of the background of how the status you have with this Department of Justice and what it means to be a whistleblower, because question I have, I think a lot of others have as well. It's like, all right, you're getting the Department of Justice has these guilty confessions, yet I'm going to pull up this chart. This was stunning. It's almost to the letter what you described to the CFTC, and we'll get to them as well today also. But when you emailed Elliot Ramirez and you said, if the number is good for gold or silver, they'll let people get on board and then hammer it down. This is during Jerome Powell's speech last Thursday. Well, I mean, he's already promised unlimited QE, now said interest rates 0 for years. That wasn't enough. So he's on there rambling about something he calls inflation targeting, which I guess they're bringing their target above 2% to make up for his perceived deficit over recent years. He actually said it with a straight face. I couldn't. But it's hard for me to imagine. I mean, I know there's the algos and everything, but just that somewhere around $28, everyone in the world, all the silver investors said, oh, well, I got to sell it. It's too high. This is exactly what you described. And what we've also heard a lot is that the same guy who's selling it up there is the same one who's buying it back there. So again, if you could explain perhaps first what your involvement with the case is, and then anything you can share on that, because people are baffled how it continues to happen almost daily now.
Yeah, it is baffling. Chris, it's baffling. And as you say, look, these charges that were laid, again, you're looking now at a tier, an increasing tier and more senior tier of people being charged at JP Morgan, this criminal enterprise that they describe, this is DOJ's words. But most of it is related to spoofing, which is an activity down in the weeds that is only one tool in the toolbox to actually do, which is the evidence that I was providing, was to say, not just it's as if something's about to happen tomorrow at a certain hour, but also I think it's 88 examples of where gold will fix the following day. And because this spoofing tool was really the tool to get a price to an exact point, an exact to the tick point before it would rally again. So yes, as you say, you could sell with impunity, knowing that a day ahead, you would know that whatever the price rose to, you could keep short, knowing that you'll buy it back at a predetermined point. And then what would you do? You'd then go long. So you'd have a double whammy. 88 examples of that. So, okay, so these were, and this, we're talking about people, and we were talking about JP Morgan, we're also talking about Scotia, who's already under investigation. We're talking about, and who have just recently done a deal with the DOJ. And I think the deal that has been done with Scotia, and not just JP Morgan, but probably the other banks involved in this investigation. I think what's happened is these banks have basically, it's so serious that we're talking about not just spoofing here, we're talking about wire fraud charges, we're talking about RICO offenses, jailable offenses. When you're talking about fixes, we're talking about something that was agreed by someone very senior, not somebody down in the weeds spoofing. And I think that's the reason we've seen this investigation by the DOJ stretched out for, as you say, a couple of years. And I think what it is, this is really what I honestly believe. I think what it is, it's so serious that whether people get charged or not, that's a whole nother issue. And I've always had my doubts. But obviously this sort of RICO offenses were happening, had to be at board level because fixes have to be agreed at a senior level. You don't just have somebody on the floor doing that. So when you've done that, then obviously the fines are one thing, but the effect of all of these banks who essentially have been doing this exact, what we're just describing here, rigging the market, and it takes more than one. We're talking about collusion here. The evidence I gave involved more than the two banks we talked about all the gold fixing banks, and all of those that were fixing through the period of 2008 through 2014. And this is what the investigation is all about. So by delaying it, what I think is going to happen here is the reason it's delayed, it's going to be so big. And what it will do, it will bring into the forefront just how undervalued gold and silver is. As a result of all of this collusion and price fixing, not higher, fixing prices lower, then what's going to happen is people are going to say, well, what's the value of gold and silver? What would it be had there not been this collusion? Mm-hmm. And okay, so it's, I know, everyone in the community, gold community and silver community know it's rigged, but not everyone else does. And most people would think it's implausible. So when it actually is, when charges are laid and they actually move into the serious fraud cases, what's going to happen? We're going to have what the DOJ said to me when I left the building. What about the economic consequences of this? So, okay, now you've got two taxpayer-funded banks who have been doing something so illegal that, forget the fines and the class action suits that could come through in the billions and billions, which will come through in the billions and billions. It's the fact that you have to have the gold price reset done by that point. You have to have the foreign exchange markets. You have to have all these participants, every single one of them, including every central banker, who knows what's coming down the pike, long foreign exchange gold, which is why I've been talking about it so much in the earlier part of our interview, how important it is and why they're all going long, because it's the only place you can square the price of gold that's the only place to square it at a higher price in the foreign exchange market. And if you're all long and you've got no worries about any residual short positions, and believe me, there is not a single bank right now that is apparently short on the COT report that is not fully hedged in the over-the-counter markets long. Why would you be short a market that you know is going to get revalued? So I think, in summary, DOJ, when the DOJ acts, get yourself long gold and silver pretty darn quick, because you know the revaluation. That's probably the trigger for the reevaluation point.
Yeah, and interesting, you just mentioned there that these banks are hedged. I know people have mentioned that at times, and we see, I keep an eye on that little target of the section of the COT report where it shows how short the 4 largest traders are, which in silver has been around 245 million ounces. And people have asked me before, are they hedged? Although I wonder who's on the other side of that hedge. I mean, it seemed to me kind of someone out there has to be unhedged. But it sounds like you feel that these banks are hedged, or if they are, like, who's on the other? There's got to be someone out there that is net short at the end of the day, right?
Yeah, there is, and I think you're going to find that it's the insiders, it's the likes of we talked about Goldman last time. We talked about Goldman, the Bank of International Settlements. We talked about the Treasury. These guys are all on the right side. This is the most well-connected bank globally, and we talked about them last time. We spent a bit of time on it, actually. Oh. And I think these guys are long, and are long physical, and are long unallocated. And I think that, in fact, really, I think maybe we should just quickly go over, we talked about the BIS earlier, and I said I was going to come back to it. So should I just go through what I see with the BIS, because it explains a lot? Yeah?
Mm-hmm. Yeah, please.
Okay, so we're talking about unallocated gold here. And what we know is, what recently been reported on this, is that central bank positioning, the central banks are positioning for a gold price revaluation. And as I say, this has come from some extremely reliable sources, and also it's what we view as occurring on the daily footprints in the wholesale market. It's clear. It's in an unprecedented situation. The BIS has accrued an extremely large, long, unallocated FX gold position. And market making insiders, that's the bullion desks, some of the bullion desks are emulating the BIS and getting on the right side of FX gold ahead of the inevitable gold price revaluation. Now, remember though, Chris, as much as you might be short one market, what allows you to have enormous position concentration is the fact that you've signed off, yes, but I have a gold position in the over-the-counter market that's long. So I'm not concentrated at all. So here, and that's been the argument, that's been the problem. And so, but by using this position concentration in the COMEX, where you've got siloed people that cannot trade outside of that market, what you're doing is you can use those positions to put, as a market maker, you pull some bids. You don't have other people do the work. But essentially what you're doing is, if you're long, and you only have to be long, technically it should be physical, but it's not a physical market. It's 100, 200, 300 to 1. It's a paper long position, but it's an FX gold position. And because it's an FX gold position, it's considered to be cash. So therefore, what you're doing is it's gold, and therefore you can use position concentration to rig one market while going along the other. And I hope that answers your question about, you can be both. And it's because it's this market is such a con. And we've repeatedly drawn attention to the only method to revalue gold. It has to be squared in the FX markets. And that's where we're ultimately headed now. And this strong spot gold and silver indexing action is tightening deliverable bullion stocks further, and it further endorses that the trigger points, which we just talked about, absolutely look like $2,500 and $35 in silver. And really, just to sum things up, what we're currently witnessing is a carefully constructed medium-term insider setup to take full control of an impossible to avoid upside gold price revaluation. And what this tells us is, and really we're getting, really, I think we have two separate first tier bullion bank desks confirming this, that the BIS quote from both of them has never been so long on unallocated gold. And so what they mean by this, they're long foreign exchange gold. And essentially doing what all the other banks are doing, bullishly spot indexed, while providing silver, physical gold, not silver, physical gold, to the agent banks so they can scramble to meet delivery demands in GLD. They don't have silver. And the whole other situation with SLV, well, SLV, we've already discussed SLV. That is an impossible situation that these bars even exist. And basically, as we just said, any 1,000-ounce bars headed to the COMEX are on their way back. So I think what we're saying is, given the unprecedented tight gold bullion conditions that we're experiencing right now, what we are all struggling, and we're all struggling to get any supply. So what we're saying is that officially supplied physical will imminently run out. And with less bullion available, the offer to sell bullion will ultimately rise enough to trigger this reset trigger. And it's really, you combine that with what's going on with the DOJ and the investigation, I think we've got a perfect storm here where something is going to give. And really, it ain't going to be a lower gold price.
Yeah, I would imagine not. One last quick one on the regulators and that whole debacle. I know there's a lot of people who have lost money. I'm one of them that I would say that if you couldn't just hammer the price at will. And maybe it's a little bit early, but what could you say to folks? Are there options available? Is that still on hold? But for people who want to submit a claim, I'm at least going to attempt to organize or help people find where to go. Anything you could tell people who feel they have legitimate claims against some of these banks?
Yeah, I think what's going to happen is it's going to happen. I mean, as soon as the DOJ comes out with RICO charges, I mean, spoofing charges can be dealt with by the CFTC, by the DOJ. They can be kind of dealt with, slap on the wrist, and it'll all go away ultimately, but not RICO charges and wire fraud charges. So the minute that charges are laid, every single lawyer and their brother globally is going to sue these banks. And so at that point there, yeah, you may as well join any number of these class action suits, which how can they possibly defend themselves against a DOJ rule that the DOJ can't protect them from? It might protect them from or limit the fines. They might limit the jail sentences, but they can't stop a class action suit. So I think your chance will come. The only trouble is these class action suits, hopefully be different in this case, because it's so clear cut, is that you tend to get a very small percentage back. It's the lawyers who do well out of these things usually. And you know, the massive expenses involved, and then everyone as part of the class get a payout. Now, normally that is cents on the dollar, but in this case, because it's so clear cut, it might actually be substantial. So I think that's really, we're talking about waiting for the DOJ. But do remember that I honestly fairly believe that anyone who's long gold or silver, when this announcement gets made, it's going to have the ride of their life, because people are going to question, what is the price of gold? Is the price of silver?
Yeah, and I mean, you know, I wouldn't advocate running the Fed's printing press to cover all bank losses, but gee, maybe we'll get a lawyer and we could take our claim to the Fed's discount window and they can just paper it over there, and appreciate that. We'll at least try and organize and help people know what the options are, and because I think there are people that, you know, there's clear people, not just people who are trading or whatever, which I think is rightful too, but for people who are just trying to protect their savings because they see what's happening with the dollar. And I don't think they were wrong. I personally think they got cheated. And anyway, we'll keep an eye on that. Andrew, before we wrap up, though, I was wondering if you could give us an update on how things are coming along with Kinesis, and you know, why I think people would be well served to be aware of what you're doing before all of this unfolds, whenever it unfolds.
Yeah, no, and thanks for that. And I think, you know, the whole reason I'm involved in Kinesis is because when I came out of the DOJ, I knew from what they said there would be multiple years before anything ever got done, simply because of the economic consequences. So what we had to do is try and find a way of buying physical and making that physical purchase to be able to utilize that physical purchase for everyday use. And so, but we've been encountering an enormous, and recently, and I think in the last 2 years, we've encountered a move by people to exchange their debasing fiat currencies for gold. And really, obviously, that is the best option to preserve your wealth from any further debasement. So, but the point is, how do you use it? And I think that's where I think it became interesting for me with Kinesis. It's agreed. I mean, it's agreed. Physical gold titled to you and securely stored outside the banking system. It's the only way to sidestep the counterparty risk of a broken banking system. And we know that ETFs do not give you title to gold. That's just a claim on the counterparties who manage these ETFs. And the same thing is when you buy unallocated gold, you're not the owner of the gold. It sits on the balance sheet of the bank, much like when you deposit cash into your bank, your deposit is on loan to the bank. So really, this is where I became so interested in, and we needed to create something that could be utilized. And because people are wanting to, I mean, I'm talking about people divesting 80 and 90% of all their cash into physical assets like gold or silver, not the 5 or 10% that used to be the case. And they just want to invest them in physical gold. But in the process, you've got to eliminate that. You've got to make sure you've eliminated one counterparty risk, and to ensure you eliminate any new counterparty risks. Now, your gold must be easy to access, though, seamlessly transact with. The process of exchanging physical bars or smaller coins is almost impossible. You can't really take a coin and nip a bit off. It's time-consuming and cumbersome. So this is why a better solution had to be sought. And to also, really importantly, and I think this is another key where a lot of gold coins don't address this. You have to ensure the least price friction when you buy or redeem gold for everyday use as a currency. So it's obviously best to buy your gold, sell your gold in the wholesale market. And that's not a facility that's available to the public, nor is it easy to use physical gold for small transactions, such as buying groceries or paying utility bills and those kind of things. So, but with the advent of blockchain technology, suddenly all this became possible. You could digitalize your gold into small enough units to use as an everyday currency. Your gold can convert it into essentially a redeemable e-payment currency. And that means that the 90% or 80 or 90% of your money, that your cash has been turned into gold, is accessible to you. It's usable. And your gold can be converted into anything you buy. But it sits on the blockchain rails in your name. It's so important. It's insured. And you have to be sure that it never sits on the balance sheet of any other institution. And once it's securely digitalized, you'll be able to spend, save, or hold that gold in its ultimate liquid form. And that's where Kinesis comes in. Kinesis provides all the security required to trust your gold is always titled and accessible to you, but enabling you to exchange your gold currency for any other currency or back to bullion in an instant. And furthermore, and unlike any other e-payment offering, Kinesis enables you to become your own central bank, which is again something that we've addressed, that people ask for. And that's where it gets interesting. What we've just described is how to escape a broken banking system, to sidestep competitively depreciating fiat currencies. But unlike any other gold market e-payment offering, Kinesis includes you to become an integral part of the Kinesis monetary ecosystem. And essentially, you share in the transaction fees that enable all currencies to flow, and they just share back to you. And this is done transparently, And I would encourage you really to look at this page here that Chris has put up on how to mint. These videos explain it all in 2 to 3 minutes. Anyway, I just think this is a way where we can all become an ethical part of the solution.
Yeah, and Andrew, I appreciate you have video lessons, a bunch of support options, places where people can go with questions. I know you've also been doing a great podcast people have been enjoying, and I've been listening to. Is it each month you do, or twice a month now?
Every 2 weeks.
Okay, so and also the links to this, and if you're interested in opening an account, are in the description field below. So Andrew, I thank you again for joining me this month and everything you shared, and great to hear that Kinesis is coming along, and should be an interesting, what are we in, early September now, so we got 4 months left, and I think it's going to be an interesting end of the year. So I appreciate all that you're doing, all that you're sharing, and we'll look forward to catching up with you again next month.
Yeah, and I look forward to it. And won't we have a different story next month?
Yeah, although actually I almost didn't remember, but we will be seeing you next weekend for an appearance at SilverFest, where we'll be digging into all these things. You're going to be talking about, I believe it was, whether it's even possible that the metal is being added into SLV. Alistair McLeod going to be joining you for that panel. So it's going to be quite a time. Excited to have you on board. And I know a lot of people are getting pumped up for that already. So we will look forward to seeing you there and following all your success throughout the end of the year. And thanks again for being here today.
That's great, Chris. Looking forward to it.